Hey friends, so the video you're about to watch, we recorded it before word came out that Mondelez is considering making a buyout offer of Hershey. That's why we didn't mention it in this video, but also we are working on another video. We're going to take a closer look at the potential deal, how investors should be thinking about it. Nonetheless, my position on Hershey remains pretty much unchanged that I still think it's a good value. Whether the Mondelez deal happens or not, I think investors should still be taking a look at it. All right, enjoy the video. Tyler, it's December. The year's starting to come to an end. And in a lot of ways, it feels like everything has gone up. Multiples have gotten stretched, and it feels like it's harder to find opportunities to buy. But there's still value out there. There's still opportunities. And we've got a couple stocks where there seems like there's some opportunity. And these are durable businesses that we think have a lot of potential to continue to create value for their investors.
And we're even going to flip the script a little bit because you're going to be the one doing the dumpster diving and I'm going to do the richly valued growth stock. So we're really turning things on their head today.
It's not often you can find some delicious chocolate in the dumpster dive. And this is one of my favorite businesses that has some really durable brands. I've talked about it before. It's been a while. So I think now is a good opportunity to talk about it, talk about why it's a buy. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, we got two. Go to our special link for more. It's fool.com/unscripted. Again, fool.com/unscripted. Go to that link and you can get the Motley Fool's 10 best stocks to buy right now. Okay, Tyler, how about you get started? First, before you get going, though, we're going to talk about companies in the food space, durable consumer space. A lot of stocks are down. This is a company you've talked about before. I think you've written about it on your Misfit Alpha site, but it's something that I can promise that a lot of people in Mexico rely on this company, but probably a rounding error from 0% of people in the US really know much about this business.
Yeah, I highly doubt most American shoppers have ever experienced anything with this company. It's called BBB Foods. Its name in Mexico is Tiendas BBB. It is a what you would call a hard discount grocer. So for those of you who don't necessarily know the concept of hard discount grocers, it's that very bare bones, don't even really have shelves, everything stacked in pallets on the floor. Grocery outlet bargain market, I think, is maybe the closest thing we have in the United States, or Aldi is pretty common in Europe. That style of grocery store is what we're talking about here. And BBB Foods is a hard discount grocer that has specifically tailored a storefront for Mexico. One of the reasons that I really got attracted to this company when I was reading the IPO prospectus for this company, because it IPO'd earlier this year. It's a relatively new company. You go up and down the IPO prospectus, and it's one of those things where, like, the meticulous details that management put in, those are the kind of things that you can't really fake. A lot of times you can put in a few details here that make something look tantalizing, but the level of granularity and detail that they went into on understanding their consumer and building a custom designed store for their consumer is what has impressed me so much about this company. They went down to the ideal size of packaging for each product that they put on the shelves because they know that their customer is probably walking there on foot and is going to go 2 to 3 times a week. So we want to customize like how much food they're bringing home based on those kind of delivery. It's that sort of level of granularity. Anthony Hatum is the CEO. He was a guy that was basically like a sell side equity analyst that studied hard discount grocers globally. He's Turkish and spent a lot of time with Turkish hard grocers, which is it's a very common theme across all of Turkey. And he basically went and did like this white space sort of investigation, like what country could benefit from this style of grocer the most. And it was Mexico. Went down there, hit the pavement, was trying to figure out how he wanted to do this. And the way that he has constructed this business is spectacular and it's showing. For the past 10 years, the company has grown same store sales at 10% or double digits annually. Over the past quarter, it was 11% gain on same store sales, which for grocers is almost unheard of when we're talking about same store sale ticket prices. As of right now, there's about 2,600 stores across all of Mexico, and in their white space kind of IPO deal, they think that their target market for all of Mexico is 20,000 stores. So we're looking at a 10x store growth with significant same-store sale growth on top of that. And I think with all of those things combined and a management team that is hyper-focused on the customer and how to deliver good value to the customers, I really am impressed with this company. And it's a company it's a stock I do and plan to buy this month.
It's a recent IPO. Just a couple things to highlight. The stock's up about 55% since IPO, late this winter, early spring. It's down a little bit. And it's down because since Donald Trump was elected as president, has talked about some pretty substantial tariffs on Mexico. And that's one of the things that's driven the stock price down. So even though it's been a big winner already, and again, it's the long-term value before going public has been created, the market does seem like it's giving us a little bit of a better opportunity to add. So you're taking advantage of that right now. Investors watching, you may want to consider following Tyler's lead. Do your own due diligence, of course, but definitely something compelling there. So Tyler, you said I'm going dumpster diving. I'm going discount diving for delicious confectionery goods. I'm going to talk about Hershey. This is a stock that I first opened a position in earlier this year, and the stock it's gone on a ride. Since the beginning of the year, it's down about 6%. A lot of up and down, and definitely reason to think, Tyler, in the near term, the stock may continue to struggle. And that's because of a thing that's been putting a tremendous amount of pressure on the business, and that's cocoa prices.
Yeah, it's been number one, confectionery is pretty competitive space as it is. You got Hershey, you got M&M, Mars, Nestle. There's some pretty large players, and price sensitive customers do tend to pull back on things like confectionaries in high inflationary times. But cocoa prices have been on a very weird sort of quarter run over the past couple of years. There's been some very abnormal weather situations happening in certain parts of the world. And one of the reasons that we're seeing another downward trend recently is because of there's been weather projections for basically the Ivory Coast, Nigeria area, which are the largest cocoa producers in the world, Ivory Coast being the largest. They're expecting some very strange weather this year and into the spring that could possibly impact cocoa prices for the next 6 to 12 months. And when you're at somebody whose entire business is reliant on cocoa prices, or at least for the large part within Hershey's case, that is going to affect them pretty significantly.
Yeah, you see it on the screen right here. This is the past 6 months. Cocoa prices started to come down earlier in the summer, but have really spiked more recently. So again, I think there's also some pressure here as well, concerns about tariffs affecting imported goods. And besides the environmental pressure and the weather pressures on cocoa supply, that's going to cause prices to go up. We've got some of the geopolitical pressure there as well. So why am I thinking about buying Hershey right now? So first of all, this is a business that has consistently shown the ability to navigate commodity prices in its history. There's going to be fluctuations. That's just the nature of their business. It's also the kind of product, Tyler, that we've seen. It's kind of like the lipstick index, as they call it, to a certain extent. It's a discretionary good, but it's not a car. It's a candy bar. It's some snacks. And people during periods of economic uncertainty tend to still reward themselves with these small, low dollar cost treats. When you have the brands that Hershey has, it has some pricing power, ability to kind of soak up some of the additional costs that come over time, and often raise its prices even more than inflation, so that it does create more value over time. Its revenues have been a little bit lumpy. More recently, again, it's a very competitive industry, so that's typical of what happens. We've also seen more competitive entrants. A lot of people talk about Mr. Beast's Feastables brand as being a big threat to these businesses. Typically, those sorts of private brands, that when they get established and get some sort of market share, somebody ends up acquiring them. So I think eventually maybe that's the path for Feastables, is getting acquired by somebody in the space anyway and just becoming another brand. You look at Hershey's brands and we see that it has played out for years.
You just described the energy drink business to a T with that kind of private label getting gobbled up. That's exactly what we've seen in the energy drink space over the past 15 years.
This is how the food business works. You can look over at General Mills and all of the brands that they've soaked up, particularly in natural and organic foods. This is the food industry. This is the way it works. I'm not too concerned about competitive threats to a company like Hershey. So where do I think about Hershey as a buy, and why now? So Tyler was teasing me about dumpster diving. I don't think this is dumpster diving as much as it is when you have these large, mature, well-established businesses, you want to be thoughtful and timely about when you buy them. For a Hershey position to be worth owning, especially if you're looking for it to generate kind of market beating returns, you've got to buy it when the stock is cheap and when there's opportunity. It trades for about 20 times earnings. That might not look super cheap, but earnings is also down. Their earnings per share is down from, I think it peaked around $10 a share. Earlier this year, it's down in the eights now. So earnings per share down 16 or 18%. So if you think about its peak long-term earnings potential on the other side of this peak cost cycle, the stock's cheaper than it looks. The dividend yield's around 3%. That's very much on the higher end of where it's been over the long term. Company does have a pretty good track record of being able to grow that dividend too. So beating inflation over the long term with dividend growth as well is something that can be really attractive. So I think you put all that together, Tyler, and even though there's definitely risk in the near term, it's going to be hard to get a perfect price on any stock. You could buy it in the weeks and months to come. The price could continue to come down as the volatility plays out. I think you buy right now and be thoughtful about owning it for the long term. I think Hershey's really attractive to buy in December.